move on now and talk a little bit more about the operational model and also the distribution model. Senthil, we've just alluded to some of the sort of issues there. I'd like to kind of draw them together a bit more and dig in. So first of all, that brilliant example you just gave of how they used these, I suppose, mechanisms that we would very much associate with Web 2.0, YouTube and Skype and so on. Can we explore a little bit more about how you think banks will have to tap into those existing channels, alternative channels to market to Generation Y? What are the kind of implications for those communication channels with their customers?
There are, you can set it up as part of what you have as customer service today. And then you can channelize that input into the product development organization within the bank to create those products. But I think the most effective way is to get the business to actually be part of the conversation and then construct those conversations into products and services going on into the marketplace. So I think there needs to be a shift from being driven by what you produce to actually have the conversation and then produce what the customer needs. So there's a big shift in that. Mm-hmm. And if you start doing that, then customization or personalization becomes very important. So you should be able to choose a card and a savings account and a loan account like you would as a person. And then the bank should be able to say, yeah, for this fee, we should be able to do it. So that mechanism of drawing out, having that conversation, building that is quite possible today in the current context of using a social media. So the question is, how many of them do see that as a strategic input tool, and how do they participate, and then bring that as a structured input within the organization is a key question that they should ask themselves, and then move on. I see very few conversations of sort going in that direction. Lots of banks are using social media to listen, attend to anything that is coming up from the customer side and address those customer service issues. But I think the step forward should be in terms of actually understanding what they are asking for and then trying to build it back into the product or services that you're offering. So that's a big difference. The second is in terms of, you mentioned distribution. I think the distribution by brand association or partners is going to be a very significant point of view that you need to look at. Two things that you need to look at: whether you are better off manufacturing and letting distribution happen through somebody, or you are better off saying, I will build a brand that will assemble a group of or a set of products and services, even if I'm not the manufacturer. So you bring the capability, underlying capability through partnerships to manufacture, or you represent somebody who manufactures well, and then you're able to fulfill that promise. So I think there'll be a lot that is happening in terms of being associated with brands which are non-financial services to make sure that you're present, so that your point of entry is very different from where you are today. The second is, it is also very clear, I think, over the years that credit decisioning is not the strength of non-financial services brands. It is the financial services companies which are very good at, and that is their core competence in terms of making a credit decision. So partnering with another brand which has fantastic touch with the customer is a good example of how a financial services institution and another consumer brand can work together.
Okay, let me jump in there. I mean, there are lots of interesting implications there, aren't there? I mean, banks want to have their own brand. We see banks, especially after the crisis, spending tons and tons of money on television marketing campaigns and all the rest of it. So there's a little bit of a tension there, isn't there? The question is sort of like, how much do you allow your brand to merge into the background? How much do you become the kitchen, as it were, and you use other people's restaurants to deliver the product? And then I don't think that can be an easy conversation to have.
It is not going to be easy. In the current context, the advertising or the messages that are being shared in the medium is primarily to establish that trust. It is not about actually getting more attention from the customer or signing up more customers right now. It is also trying to show the presence that you are there, you're doing business, and you are willing to help specific segments of the business that you wanted to work with, right? But I think the strengths in manufacturing and distribution needs to be understood. So you cannot undermine your strengths in manufacturing and credit decisioning when you work with a larger consumer brand. So you kind of enter into a conversation which is amongst equals. So I don't think the situation where the brand will be behind in the kitchen sink or whatever is the context that you have portrayed. It may not be that. There will be equal partnerships that will be established, but I think you need to go out and put your story first, and then also draw the other brands in to have that partnership view going on.
Let me just pick on you regarding the channel strategy. I just wanted to go back to that quickly. A lot of people would sort of assume that the online bank is kind of the natural habitat for a Generation Y individual. But what I want to ask from you is that a little bit of a misconception? And what insights do you have in terms of how someone of the Generation Y group consumes things online compared with other channels? So do they use the ATM in the same way, for example? And what are the implications for how banks sort of link up those different channels?
I think the online banking is an inside view for the outside world. It is not about what you can offer the outside world directly. So whatever is your capabilities and whatever is your manufacturing support that you have is what is portrayed in an online bank. So sometimes you get some banks which give you a different level of service online. Some banks just give you a certain set of basic services, and sometimes you see notices on your account saying your account will be not available till 3 in the morning. So these are certain limitations that you have in an online bank. But I think looking the other way around, when you're looking at Generation Y, you are looking at those people coming into your bank in a different way, not by just online banking, but it's about the whole experience that they have and how financial services fits into one of those things that they do in their daily events or life cycle of events. So that is where I think they need to look from outside than inside. So when you look at that, then some of the channels might be irrelevant. Okay, for example, if the new capability for near field communication goes into production, this is about using a chip on the mobile phone to pay in and pay out, right? And it's the same secure device. All of us are using it. There are more than 1 billion phones around in the planet. So if you get the near field communications as one of the mechanisms to start working, then you should be able to provide that service there rather than trying to offer something as a debit card or a credit card or a loyalty card outside. So you should be able to build that into that process so that people use one secured mechanism, and that becomes the means of doing everything else.
Great. So it's not just about the online channel.
Yes, it spreads more than just being online. So it's also convenience, and at that point of interaction, what becomes very relevant is what is available and how you can use it.